Good morning from San Diego, California, and thank you so much for being here today. We are hosting a Regenerative Harvest Portfolio information session talking about a new capital strategy to support producers, packagers, and processors in building a resilient supply chain, regenerative supply chain in our agriculture and food systems. As you've seen, hopefully pop up on your screen, we are recording this session. So any questions that you have, or if you missed a little bit of it, it will be available recording after the fact on our website, and we'll be emailing that out to registered participants as well. Hopefully at this stage, you have gotten some familiarity with Zoom and computer audio. If that is not working for you, please try dialing in using your phone. We've muted all participants this morning as folks are numerous, and we want to make sure that we have the best audio quality for you. We welcome all questions, and to ask a question during the time period, feel free to use the chat function. You can see the little speech bubble to type in questions. Our team will address some of those through the conversation, but we'll also have time towards the end of our information session to get into dialogue with you. Again, the session is being recorded, so don't worry if you can't stay the whole time. We will make sure that we get this information to you and answer any questions that you have. Okay, so who is this? Who are we talking about? MissionDriven Finance is an impact investment firm. We got started here where I am in San Diego, California in 2016. We are a certified B Corporation with an intentionally diverse team. We have currently 61% women, 61% people of color, and 43% who are first or second generation new Americans. And that's on purpose. It is to drive how we reconnect capital and community, ensuring that good businesses have access to sufficient affordable capital to be able to make change in their communities. And we're very proud of the fact that over the last 6 years, we've deployed more than $34 million into the community with and through our partners. So about MissionDriven Finance and this team. Who is this? This is a little snippet of our team, but this is who is predominantly working on the Regenerative Harvest Portfolio. So I'm joined today by Xitlali Ceballos, one of our community finance fellows and an individual with an incredible background in food and agriculture. David Cooper, whose title is changing imminently as he joins our team full time. Very excited about that. But David Cooper has also an impeccable background in structured finance and thinking about how these systems all play together. I am your host today, and I'm also a co-founder and chief community officer here at MissionDriven Finance. I guess I should say my name. It's Lauren Grattan, and I use she, her pronouns, and I'm happy to be here. Oralia Alvarez, our Director of Business Development, is not joining us today, but is available to have short calls with folks who are interested in financing after this call if your questions don't get answered, or if you would like to just get into a little bit more depth. So we'll be sharing how to talk with Oralia and Xitlali after this. And I just introduced myself and our team, but feel free to introduce yourselves in the chat too. We'd love to know who's here joining us today. Thank you also as you registered for sharing a little bit about yourselves with us. Very much appreciate it. Okay. So why do we care about food systems and why create a new fund? Xitlali will share a little bit about our philosophy and what incited MissionDriven Finance to move forward with this.
Okay, thank you for that introduction, Lauren. Good morning, everyone. Afternoon for folks on the Eastern time zone. So yeah, why do we care about food systems, right? It is essentially within three themes: community, climate, and ecosystem. We believe that the cultural obsession with scaling at all costs has costs that are too high for our people and our planet. We see this frequently in finance, which has very short quarter cycles, and those effects on climate and community are often abstracted. At MDF, we recognize that our food systems are powerful sites of overlap between nutrition, worker safety, and dignity, carbon, climate, and water, the embedded history of land use and ownership, and of course, the cultural convening power of food. And we believe that adding more aligned capital tools to the toolbox can support the transition to a regenerative food system. The Regenerative Harvest Portfolio is just one of these tools and is intended to augment and complement the work of many others in the space that we admire. Next slide, please. So just one key element of the Regenerative Harvest Portfolio is that we are inclusive and flexible. There are critical bottlenecks in the current system that limit the ability of good producers, processors, and packagers to achieve sustainable scale, especially for early growth stage enterprises. The portfolio aims to support the transformation of our food system into one that is regenerative, healthy, and resilient. So these critical bottlenecks in the current system limit the ability of good producers, processors, and packagers to achieve scale in the same way that industrial agriculture is currently in. And so for early growth stage enterprises that have limited access to affordable capital, this is a really important tool along with the others that are within this sphere. The portfolio will provide inclusive and flexible financing to these businesses with an environmental justice lens, including a focus on rural, women-led, or BIPOC-led organizations. Next slide, please. So, building a regenerative supply chain. What do we mean by producers, processors, packagers? So producers, we have a really good idea of. Those are the farms, ranches, land stewards. In our case, we want to be supporting those entities that are cultivating with regenerative practices, but some of their capital needs, may be converting to these regenerative practices, right, which is an expensive upfront cost, or scaling these regenerative practices through their harvest cycles so that they can meet the demand. And for processors, this is how we usually interact with our food. They add value to raw inputs by cutting, cooking, curing, combining, roasting, just making food more available to us, and particularly the raw materials. And their capital needs will be a little bit different from producers. Some of them may need capital to make commitments to acquire from regenerative producers, which also demands capital on the front end, or they need to update their equipment to process those raw products efficiently. And then within the last stage, and this is the stage that we're mostly affected by, this is the stage that we most see, is the packagers, right? These are the brands and distribution channels connecting to buyers and consumers. And their capital needs are usually purchasing inputs from producers or processors and updating their own equipment to package and transport goods. I just wanted to speak on just like even this image, right? The traditional supply chain within a regenerative ecosystem isn't necessarily linear the way we have it here. The way that we are approaching this is that it can be circular as well, and a good circular and cyclical. And a good example of that could be processors redirecting organic waste from their outputs to producers so that producers can compost that waste. And that's just one example of this practice.
Thanks, Xitlali. And just to add, this is really the goal of the harvest portfolio, is to create this integrated supply chain where there are wonderful producers who want to embrace regenerative practices, but need to have the capital available to be able to actually do that. Some of that is with their own capital needs, but sometimes it's also having a processor or a packager that can afford to front the money to purchase from them and close the gap between harvest and market. So we know this, and we'll talk about an example in the case of wheat, but there are wonderful farmers that have embraced regenerative practices, that are working with their with the land, working with their teams to ensure that they're not getting exposed to harmful chemicals. They have good working practices, but they needed to know that you're going to buy this at the end of the season, right? And so being able to make those commitments in good faith and have the capital to back that up is one of the pieces that we're trying to solve here. Adding the flexible working capital that really helps to bridge, again, from harvest to market, whether that's in a producer, processor, or a packager, enabling this supply chain to work together, work in tandem, and be able to price appropriately all of these re-internalized externalities. How is the land treated? How are the workers treated? How is the water treated? How's community benefiting from this? We want to see that in that, and that's why we are providing this capital structure on top of existing tools to help make that possible. So what is this? Xitlali will share a little bit more about what is the financing that we're putting forth.
Yes. So the Regenerative Harvest Portfolio is capital to bridge from harvest to market, as Lauren has said. Regenerative and empowering financing for US-based organizations that both advance regenerative agriculture and food systems and support overlooked and underestimated communities that have been excluded from this capital. We know this history in the United States. This has been Black farms that have been explicitly excluded, from financing through the SDA, and in addition to private capital. And the critical working capital that we seek to cover is $200,000 to $1 million, 6 months to 3-year terms, loan rates up to 9%, and low restrictions on uses of capital. So these will be very flexible. Just a note on the loan rates up to 9%. We're really pressing investors, for lower interest rates, and the lower interest rates that we can procure, all of those savings are passed on to borrowers. And then the last point, inclusive and flexible. We do not do personal credit scores or personal guarantees. And we even structure this financing to each business's needs, right? So there's just regular debt-based loans, revenue-based financing, and Islamic financing as well. And we have support, language support for Spanish, French, and Vietnamese speakers.
Thanks, Xitlali. So this is a plenty to unpack. And again, this information will be available for you both in the recording and on our website following this information session. But we do intend to have these inclusive and flexible practices so that we can get capital flowing where it hasn't been but should. So this is our approach to supporting businesses working in this space. And I'll note that 6 months to 3-year terms is not long. This is really intended, and why it's named the Harvest Portfolio is to bridge from harvest to market. This is not permanent financing. This is not, I saw a few friends from a very wonderful fund join the call that are helping to acquire land. This is meant to sit alongside and support with a different capital gap that many producers, packagers, and processors are facing. So it's really quite strategic in its use case to help bridge those particular gaps for folks that have an agreement to procure a certain amount of materials and make sure that that actually can move forward. And that comes from our background in underwriting these types of businesses in other industries. So we're very used to this kind of capital gap, and we're trying to apply the same kind of tools that mission-driven finance is familiar with into a critical space in food systems and agriculture. Okay, so what do we look for? We are making commercial loans for US-based businesses and nonprofits. You don't need to be a for-profit entity. We're tax structure agnostic, but the impact is really critical. We need to see a commitment to advancing regenerative agriculture and food systems, and that growth from this financing would support overlooked and underestimated communities. I'm just going to go ahead and name it. A lot of the conversation about regenerative agriculture tends to be less melanin rich, but we want to make sure that this is fully integrated, that we are supporting folks that have a difficult time in participation in a full economic opportunity. And so how this is going to support workers, community, or the broader leadership of a company is critical for us to see in the impact. But this is an opportunity to close a capital gap in a supply chain, again, from harvest to market. So we want to see that this can be providing that additional support. And a nice to have is intentional procurement from BIPOC, migrant, or women-led organizations. Management, we want to see that ownership and leadership have shared lived experiences with our beneficiaries, that their teams have diversity, and that they're active in an engaged network. It's pretty hard. I have a couple of family members who are in food and food systems, and it is very challenging to not be networked. So if you have managed to do that, that's a bit of a red flag. Everybody I know in the farming communities knows their neighbor, makes trades, barters, and we want to see that same kind of orientation. And financially, we want to specifically look to bridge towards this forward-looking purchase agreement, order, contract, offtake agreement to ensure that we are closing that particular capital gap and supporting those that are seeking between 200,000 up to $1 million, and with consistent or growing revenues. This is not a good fit for folks who are pre-revenue. This is, again, debt and debt-like. So if there's no revenue yet in place, not the best fit. And we want to see that less than 30% of your current budget is used for existing debt, just because we don't want to overburden companies. Not eligible. This is not designed for individuals. This is commercial financing. And this is, like I said on the previous slide, not for pre-revenue businesses. And while I am happy to break many systems in creating a better financial system and structure, I can't yet lend outside the US, nor can I lend to cannabis operations. Not willing to take on either of those two regulatory frameworks quite yet. And discriminatory and exploitive practices are just a no-go for us. So we do screen for that during our management analysis. So getting into the nuts and bolts and wrapping up our formal structure, is the harvest portfolio right for my organization? Consider this is not a grant. This is a loan. It's not forgivable like the Paycheck Protection Program under the CARES Act. We will want to know, what do you need the loan for? Really, the use of capital is one of the most critical elements for us to do analysis on. With it being a short time period, we'll want to have the flip side of what do you need the loan for? How will you be able to repay it in 3 years? And being able to assess that. Again, this is not meant to be all tools to all folks in food systems. This is really meant to provide that short-term financing to bridge from harvest to market. So an example of this, this is just if you had a, say, $250,000 loan and it was fully amortizing, you'd have some pretty hefty payments. We are always trying to reduce the interest rate to borrowers. As Xitlali mentioned, we are always in conversation with investors and asking them to accept a lower rate of return so that we can pass those cost savings out into the community. Then we lend at a fixed rate above our blended cost of capital. So we're incented to just get that money out doing good things. We know that particularly folks in the agriculture industry know how to stretch a dollar. So if we can get them a little bit more through a lower interest rate, we will try our best to do that. But this is just a sample of what the structure could be. And we have those different kinds of revenue-based repayments, Islamic financing structures, which look similar to a traditional amort table. But being able to, your payments may look different from this, but this is just meant to give a little bit of a benchmark of what might this do for my cash flow. I've gotten a question before of how do you determine commitment to regenerative practices? And really, we are good and we are finance nerds, first and foremost here at Mission Driven Finance, as the name implies. But we follow the lead of others in our space that have done more work on the impact measurement and management. The Regenerative Organic Alliance in particular has created a certification framework that centers on these three components. And we rely on the wonderful work done by other folks in the field to say what regenerative means. We do, though, look at all of these components and particularly want to ensure that social fairness and environmental justice, not just climate, but how the people are affected, is critical in what we're doing. Timeline, today is our information session sharing with you, but we are open for applications. You are welcome to go to our website. One of our teammates will share that information in the chat, and you can apply and inquire about financing today. Our process takes a little over a month to work with a borrower, have a screening call. You'll talk to Xitlali and probably Oralia. May talk with David Cooper about your financing needs, your why, and what you seek to do. And then through that, we'll invite you to upload more formal materials for analysis. And then through that analysis, hopefully get approved and move forward in funding 5 to 10 loans towards the end of the summer. That's our goal, is to get more capital moving quickly. We are aware that there are seasonal challenges in food systems and agriculture, so we want to be responsive to that. And we'll continue to have rolling approvals throughout the year and anticipated into next year as well. So I'll actually call my colleague David Cooper up to share with me about Cairn Spring Mills, which is the first portfolio company in the Regenerative Harvest Portfolio.
All right, thank you all for joining. Really appreciate the commitment to this food system approach toward a resilient, responsible, and reliable transition. Cairn Springs Mill, which was founded by Kevin Morse some years ago, back in 2015, was really built around a food shed model and promoting more ancient grains, more responsible wheat production, and working with farmers and producers, I should say, producers of alternative grains and ancient grains and perennials as an alternative to the traditional commodity crops in that particular part of Washington, Pacific Northwest. And Kevin comes out of a deep background in land management, conservation, and applied this sort of methodology, this sort of commitment to a food system that is more beneficial to soil, more beneficial to the ecosystem, and as a derivative, less greenhouse gas and less pesticides and so forth. In his sort of model of processing and working with these producers and building those dependencies between the two. In other words, using the processor, the mill, to make a commitment that if these producers grow it, they have some place to sell it. And this really is the sort of, I guess, core of what the Regenerative Harvest Fund and the portfolio that is within that particular fund structure is motivating those dependencies and creating those commitments and creating a financial model that binds them together so that there is confidence in the transaction. What Kevin regularly experienced, and we see this with many of our producer and processor interdependencies, is the capital gap. And when we look at a Cairn Spring Mill, we work with Kevin and others like Kevin, we see this gap is a fundamental challenge for them, which is how do you work within the traditional agricultural financial system, which is built around conventional agriculture and the USDA programs and the farm credit programs that don't supply the capital to those producers and those processors because it's a non-traditional crop or it's a non-traditional agricultural system. So therefore, they're outliers. And these entrepreneurs who are looking at a transition to a future food system that are thinking about this type of capital and these types of capital needs have nowhere to go. It's very difficult for them to access and have reliable sources of sort of government-based financing or commercial banking or others. So they rely on friends and family, they rely on other types of resources. And so as identified within this particular fund structure and these small, medium enterprises, we decided as a group, along with Kevin, that we'll try this with a grain note. And we ultimately crafted a financing that looked at the dependencies and then promoted the confidence and the commitment so that Kevin can buy grain and the producers have a place to go with their grain. And that really is the sort of, I guess, the internal sort of North Star of what we're trying to do, which is motivate those producers to work with a Cairn Spring or a processor, and then ultimately have a financial model that is reliable for the sort of the participants so they can commit to a regenerative type of commodity and know that there is an off-taker, meaning at Cairn Springs, that can purchase that commodity reliably and multi-cycle. So that is the core of what we're doing. And Cairn Springs is a perfect example of an infrastructure processor with the need to purchase the types of alternative commodities in order to deliver its flour to the customers that they have, which are both commercial and wholesale and retail through their consumer packaged goods products that you can buy on their website.
Thank you, David. Appreciate that. And as you were speaking, I realized that when we had gone over our team slide, I forgot our invisible circle. We have an additional informal teammate in Tim Crosby, who has been absolutely just a huge resource in helping shape what should this structure be based on Tim's great experience with transformational investments in food systems, trying to identify where these capital gaps are that are preventing us from having a true ecosystem of producers, processors, and packagers. How can they be in right relationship? And where are there capital barriers that are preventing that from happening? And can we design interventions that address one or two of those key points? So really grateful to have Tim involved as well. That is the end of our structured formal section. I will leave us with, you can contact our team at harvest@missiondrivenfinance.com. My teammates are also sharing in the chat other ways to book time to speak about potential financing. Folks that are interested in learning more about investing can reach out through Harvest, and I will be in touch with you that way. But we are really grateful for you all for joining. I'm going to stop sharing my screen and open up for questions.
I just want to uplift a question from Catherine Rogers. So she asked if a company is based in the US but sourcing from regenerative farmers in South America, would they be eligible?
That is a fantastic question. My gut instinct says yes. We work with, even in other debt funds that we have been running, we have several that are US domiciled organizations, but have operations or supply chains that are interconnected. And we are fine with that. I can't break through all sorts of structures, but particularly based in San Diego on the US-Mexico border, I would like to be able to support full movement globally and recognize we do have global food systems. So should be okay. Other questions? I apologize, I could not keep up with the chat while sharing my screen.
There was another question from Catherine asking for you to elaborate on lived experiences earlier on when you were speaking about that.
Great. So I believe when we talk about lived experiences, at Mission Driven Finance, as we shared, we have a diversity of lived, learned, and labored experiences on our team. That means, how do folks identify? Where did they grow up? How did they grow up? We have in our underwriting process, it's very much the opposite of fintech. We are embracing how to be in right relationship and to rehumanize how finance works. And so through our underwriting, we also are in conversation with leadership. We have a variation of McKinsey's OCAT, we call it the organizational assessment tool. And that conversation with key leadership helps us to understand what's the culture there. Also, what kinds of financial practices and policies do you have in place from a risk management perspective? But that's a really good opportunity for us to get a sense of what are the values of this team? How do they show up in practice? And that's what we look for. I hope that answers the question. Some is demographics, demographic representation, and some is also lived experiences in terms of, we have folks who have shared personally with me that they've grown up through poverty. And that is really important for us to know and to recognize. I don't need to have a full sob story or have you relive your trauma. I definitely don't want that. But for how that shaped you into who you are as a leader and how that informs the way that you are running your business, working with your community, working with your workers, that's really helpful for us to know. Other questions? I see one in the chat now that I can see the chat. Taji asked, does MDF offer pre-revenue financing in any of its programs? We are particularly well suited to working in private debt structures, and debt is not a good piece for pre-revenue. We have, though, had, and we are very comfortable with working with folks that have a commitment. So we've, for several of our borrowers in other products, they had secured a purchase order, but didn't have the cash on hand to be able to service it. It's the same kind of thing we're talking about here with the Regenerative Harvest Portfolio, but being able to see, well, I landed a $100,000 contract. I've got great sales, got a good team in place, but I won't get the money until after we deliver it. Can you help me bridge to that? We will absolutely do that. So it's pre-revenue-ish, pre-real revenue hitting the books, but for truly pre-revenue, there's no line of sight into a contract or purchase order, really better suited for equity and grants. And unfortunately, I don't have one of those yet. Great question, though.
Can I add a little bit to that, Lauren?
Sure.
Because I think it's part of this capital gap that Regenerative Harvest is really trying to solve. Within the agricultural processor, producer, and packaging dependencies, many of those are done under contract basis. And so we commonly refer to them as off-taker agreements or other types of inventory finance or purchase order finance. And so many of the organizations rely on those contracts with which to manage their cash flows and also establish their renewable cycles of their ingredient needs and or their sort of package good deliveries to their customers or to their intermediaries. And so this is an area within this particular food system that is so relevant in the function of commitments. And typically they're done under contracts or they're done under letters of intent or other types of commercial agreements. And so the fund specifically can take advantage of those needs and underwrite against those deliverables. And so it's a very powerful tool within this particular system of food and agriculture, and one that is very difficult within the context of commercial banking or some of the other government or institutional finance. So I really want to highlight that because it's a unique attribute to this particular industry, and we're trying to solve around that.
Thank you. Yeah. Am I blessed? I know that there are tools from the government and USDA that are really powerful. They are also not easy to figure out, as we are looking at some of them as well to see how does this sit in the capital landscape for folks. Woof. Federal grant procurement process is not necessarily the most accessible. So as we continue down this road too, it's always our orientation that if we are not the best source of capital, we will do our best to connect you to the ones that are, or ones that we know that are. And we continue to always be expanding our own understanding of what exists out there that we can direct folks to and hopefully demystify a bit. Any other questions? I can't see the little like raise hand or people on camera raising hands. So please use the chat if you'd like to ask something. The team knows I'm learning to get more comfortable with silence. It's uncomfortable for me, but this is your time. I'll give it another couple of minutes. And if nobody else asks questions, then I'll let you go about the rest of your days. And if you need to leave for something else, of course, feel free to manage your time appropriately. Is there oversight regarding following standards? The way that we work, great question, Kathy, is that we like to create an impact plan of what are the current metrics and things that you're measuring that are in your business at this time, and what do you hope to do over the life of the loan, and being able to see that. In terms of deep, full-blown measurement of their soil health, no, I will not be flying and out and doing site visits and monitoring the carbon sequestration. We will be relying upon really the commitment, and again, how this sits in terms of the management. We take an approach that's very much rooted in relationship, but relying upon what practices they already have in place for the full-blown measurement of regenerative principles. I'm not entirely sure with the follow-up question, Kathy. If not, what is the remedy? What exactly you mean by that? I think I can use the unmute button. Can you speak now?
Yeah, I'm interested in the investing side, and I'm very excited about regenerative farming. But if someone gets the loan and falls into standard typical agriculture, what's the remedy of, so I'm not saying getting into doing the carbon capture test, but if they end up not doing what they said that they were going to do, what do you do? I mean, they got a 3-year loan.
Mm-hmm. We do have oftentimes impact covenants in our loans. So we have the ability to call loans if they are grossly misaligned with the intention that we had made at the time of investment. It is only a 3-year maximum loan term. So our hope is also that the worst case scenario isn't that bad. Even if we operate from a place of trust and try and get more capital flowing where it isn't, that hopefully there are some good practices that come out of this. But really, if there is something grossly out of alignment with our work and the analysis, then we will move forward with calling the loan.
Kathy, can I add just within that particular question around these producer processor and packager relationships are fairly well defined and are rather articulate. And what I mean by that, the commitment to either a regenerative organic certification or an organic certification, a processor who is processing organic or regenerative certified material, it's a rather significant commitment, both financially, but also sort of philosophically. And to make that conversion, there is already a commitment between those sort of practices. So it would be highly irregular. And I agree with Lauren that in an egregious situation, yeah, there would be covenants around governance that there was a sort of a misdirection. But I do want to just exhibit that these commitments are rather conditioned around a better ecological system, a better climate system, and a soil system. And so it would be highly irregular, in my opinion, and what our experience has been.
Yeah, and I've asked Tim Crosby to hop on as well and share a thought with us.
Yeah, thanks, Lauren. That last question made me think about something that can be non-intuitive for those who are very much in this field, that where we need the flexible capital and the patient capital, and some of this work takes long returns. Well, what if you get paid back in a year? I mean, this is the flip side when we're dealing with harvest loans, and that we're dealing with the cycles of nature. We're dealing with the season in some cases, so it's actually shorter than a year that the producer might need the money, or the farmer needs the money. We're dealing with the cycles of nature, and that they don't necessarily need 10 years or 10 plus 2 in a fund for engagement. They need it this year. They might need it again next year. And I know from the initial experience that dealing with a grain note that was developed at Cairn Spring Mills, it succeeded. Everybody, all the investors, I'm talking from an investor standpoint here, everybody got paid back in a year. If there was one comment that came back, it was like, wait, you paid me back too fast. I thought it would go longer. So it kind of, I just want to make note that as we seek aligned capital, and alongside that is the idea it may take longer. Well, guess what? Sometimes it may not. We need aligned capital to work in time with the cycles of nature and the market to assist the growth of this whole regen ag space.
Thanks, Tim. Yeah. And I shared with somebody else who was interested in the fund. They were like, oh, it's only a maximum of 3 years. So there's not a whole lot that's going to happen in nature's life cycle. I mean, there obviously are whole seasons, but in terms of very deep transformational change, that's not what this short time frame can do. It's not what Earth's time frame lets us do. So we're a little bit lighter in terms of some of those core elements around what is happening from the agricultural practice. Not because we don't believe it, but it's really more rooted in what is the management and what's the commitment look like, because that is what we can measure and the intention behind it. Fantastic questions though, thank you. Any other questions folks have on their mind? Otherwise, feel free to send them to harvest@missiondrivenfinance.com. We'll be happy to answer them via email anytime. Thank you, Welda. Little chat wizard for me. So I just wanted to say once again, thank you so much for joining us. Thank you for your interest. Thank you for the wonderful work that so many of you are doing out in the field. Very much appreciate it, and hope that if you have questions that you didn't feel comfortable sharing through this meeting, or if you have comments about our approach, by all means, please do contact us. We are happy to engage in dialogue, if nothing else. So we are really grateful for you spending a good chunk of time with us this morning.
Thank you everyone for joining. We hope to speak to you soon.